Andrew, you ready to start the video?
Yeah, come on in.
Lots to talk about. So sit back, let's get started. Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First up, don't forget, click Show More for additional information and links for today's video. Also, if you find this video of value and are looking for a different opinion than that of Wall Street and Big TV, please do consider subscribing. So, our wall of worry, Brexit. Does the Federal Reserve have enough ammunition? Inverted yield curve, upcoming elections, trade war. There's a lot going on today. But today's agenda, we are going to go through the big charts, talk about those treasuries with my current signals, what keeps me up at night, on my radar, and our game plan as we head into the fall. Let's go to the big charts. All right, first up, S&P daily chart. What do we see here, if anything has changed? And I will zoom in on August in a second. First off, we continue to hold the 200-day moving average, although we are below the 50-day moving average, okay? The other thing is, take a look. You got a box there, you got a box right there that is formed. Very similar, the up and down movement. Not saying it's going there, but we surely are going to continue to watch it. Now, the big thing is, and I'm going to zoom in here on the month of August. What do we see? Stuck in a box, right? We are range bound, down, up, every move 3.5% to 4%. What lurks below? Well, the big thing is, when you see these down days, look at all of the volume. Down day, big volume. Down day, big volume. When the market goes up, not a lot of volume, okay? So that's a sign that I've been continuing to look at. The next thing is you go down here, we're still at 18, almost 19 on the VIX. This is recorded Tuesday morning. Expect that to pop today. But here's the other thing that really was concerning last month. Down here we have ROC, rate of change, and I use 1% as the factor, okay? And you can see here, in the month of August, we had 11 up or down days of 1%. That is huge. That is a lot of volatility. So right now, we look at where we are. Futures are down. That's probably the next move as we head into this week. Short-term signal is negative. Next up, our weekly chart, which is going to give us our midterm signal. What's changed? Nothing. See that wedge? We are still below that wedge. Momentum has crossed over negative. Strong. You can see a zoom in there. So again, midterm continues to be negative. Now, monthly view, our long-term view is neutral, okay? Why? I kept talking about this. Are we going to see a change in the monthly? You zoom in there, it stayed flat. That's the only reason I am neutral right now. If you go down, this is called PMO, Price Momentum Oscillator. That is negative, so conflicting signals, but I still think that there's a couple things that are going to make me stay neutral at this point. Right here, you see that dotted line. That's your 12-month moving average. We're ahead of it. We went below it back in December, but we still have this negative divergence. You can see it going lower, which is relative strength. All that being said, again, we are neutral. What lies below, okay? And let's look at some things that are important behind the scenes. We're looking at first, those companies are above or below your 50-day moving average. Below 40 is bearish, meaning 40%. Above 60 is bullish. And right now, 50, 50, 40 for mid caps. So we really don't see a lot going on. And then down here on the smalls, same thing at 40. So really nothing happening on that end. Okay, we'll scoot over to the 200-day. Same concept. All right, and where are we? Well, you got 54, 61, that's the NASDAQ, 44, and 38 for the smalls. So again, we're not seeing that push below the scenes that's going to give us any type of momentum change. All right, so I talked about the sectors. We have mentioned it several times in our videos. We've been in what I'll call late cycle sectors, interest rate sensitive sectors that have performed pretty well. Friday on CNBC, Josh Brown, who I don't particularly like, all right, made the comment that you could just do an index and a bond index and walk away. I think that's stupid, okay? So here, what I've done with this chart, I have it from our highs on July the 26th. That's our peak. And you can see over here is your S&P in large value, down 3.3 and 4.3. Sure, that's what you would have done. But what if you thought outside the box, maybe went a little bit deeper? Look at gold up 7%. Now these are index, actual ETFs were up higher. Utilities were up. REITs were up last month. I put in here communication services, which I sold going into this month. Consumer staples flat, okay? And then home construction up big this month. So why do you look to do more diversification and sector specific, especially in these type of environments? To bring alpha. Alpha is what? Return, right? You can bring extra return to your portfolio. So while the market from high to low is down about 5%, we have fared pretty well here over the last month. So in the beginning, we talked about something different from Wall Street and big TV. This is what we offer to our clients, not that buy and hold mantra you hear all the time. Be a little bit different, dig a little bit deeper, and do the research. If you're looking for that type of service, rather than go through it here, I have a link with all our different services, a quick video, as we've had a lot of new subscribers in the last month. Hopefully this can help you. Next up, let's talk about bonds, which of course has been the big story here, all right, because of the yield curve inversion. Anything different? Well, from the last video, you can see here I'm at 0 on the yield curve. Went as low as minus 0.04, but this morning again, we are inverting, okay? The other big thing is down here. This is your 10-year treasury minus your 3-month treasury, negative 0.49%. Why is that important? Because we now have 3 months where we've had a negative yield on the 10-year minus the 3 months. Each time in history we've had that, we have in fact gone into a recession. So again, let's talk about the importance if you are a new viewer. 10-year minus 2 yield spreads. That's all everyone's talking about right now. Each time we invert, the red is a recession, okay? And you see where we are right now. So it is an indicator, not saying it's on the forecast today at all, okay? Because it's usually 12 to 18 months out. Now these are some pretty good charts. If you like them, please throw a like down below for us. We would really appreciate it. Next up, what keeps me up at night? So what keeps me up at night? Everything outside the U.S. So we've heard a lot about trades, tariffs, right? Here is China right now. There's a pretty ugly looking trend right there. They came back and now the same thing. Now last night they're up 1.3%. Why? Because they're going to wait it out. They don't care. They know an election's coming up. They'll throw money at it, even though they continue to have some of the worst numbers in well over 10 years as far as manufacturing and some other things. So China is a problem, and then you look around it, right? You have South Korea. South Korea, that's not too good, right? higher low, higher low. South Korea is down almost 20% from its high. How about Germany? The European sector continues to drag. So can those bring us into recession? Sure. And then now this morning we saw another high on the US dollar. That's not good for goods outside of the US. Remember, S&P companies, just about 40-some% of revenue comes from overseas. So strong dollar, we're seeing a difference here. And then the big one is you have to look behind sometimes. Like I always say, what does this mean to me as an investor? Here's copper. That is a bad looking chart, okay? You can see it going down, and then this morning we are down again. Why is copper so important? It's a centerpiece of any emerging or expanding industrial economy. So China, they need copper for all the building. All of the other emerging market countries, and you see the price of copper really coming down. That is a good indicator. So a little bit more, I want to show a couple images here for what keeps me up at night. First up, to our sponsor. No, I'm just kidding. But can you imagine pumpkin spice spam? Please put a message below. Tell me if you're buying this. Yikes. Anyways, what do we have here? Interest rates in the developed world. This shows you how many negative interest rates we have right now. Of course, pow, right? I mean, how many times? This is an ugly fight that no one wants to see continue. A lot of things going on there. Thanks to our friends at Hedgeye for that one. Pending home sales. You can see here in the pending home sales, despite very low interest rates, we went down. That is very interesting. Consumer sentiment. Look at this. Biggest drop in 1 month in over 5 years. So again, there's another behind the scene fundamental that keeps me up at night. And the last thing I want to do is just remind you as far as where we are. This is one of our internal charts that we do. This shows everything that we track behind the scenes. All right, retail sales, industrial, you can pause and take a look, right? Imports, you name it. You go back to 15, 16 and you see all those negative numbers. Well, here is third quarter 2018. That's our peak. That's what we've been talking about. And we start to go negative across the board. And the same goes for earnings. Earnings and sales growth through the other day were about 1.5%. That's it. You have a lot of negative sectors that concern us. Look at infotech, consumer discretion. It shows you what keeps me up at night. Let's go to On My Radar. So what's on my radar? Last time we talked about healthcare. I'm going to show that again. It's been a tough sector year to date. Not particularly a good August. That was one of the negatives. But we have finally seen some life. That's what I was looking for. You see here, that's your 200-day moving average. We tested it several different times. Finally saw a little bit of a breakout and a move. If we can get above our 50-day moving average right there, we could see some nice gains in that sector. That's why I've stayed with it. Also a good sector at this point of the cycle. Talking about this point of the cycle in a good sector, gold. Again, I talked about this in the last video. I was looking for that opportunity to buy in, but I didn't because I missed it. Now, why did I miss it? Okay, because it happened so quickly. You had a huge move, about a 2% move there one day after the Fed in Jackson Hole, and you got to stick to your discipline, right? We have a process here. It was not our price target. That's what we're looking for. We're looking to be down in that 1,500 range. To add, we have our trades ready to go. We're looking to add about 3 to 4% across the board. So again, had a new client last week. Why gold? Why gold now? Okay, you're either in or out. I always say this. No interest, no dividends, no earnings, right? So what do you look for? You see this chart, might be tough to see. Maybe Andrew can zoom in. You have a death cross and a golden cross. Remember, death cross, 50-day going over the 200. Golden cross is when the 50 goes above. When you have a positive, or here, let me show you here, a negative, you get out. And look at that. Positive, you get in. You had a negative crossover out. Well, here's our positive crossover, and gold has been a great place to be year to date. So next one, it is not on my radar, but I get a lot of questions here, and that is, what about oil? How come you're not in oil? As you can see, we got out of oil over here, okay, in May. Not a good time to be in order in this part of the cycle, and you can see it, right? A series of lower highs. Don't like it. Oil volatility still elevated above 30. Don't like that. Oil is not a place for us to be right now. Next up, fear and greed. Let's wrap it up. So fear and greed, 23 this week, 19. Numbers on how to get that below. You can look at our signals, 2 negative, 1 neutral. What does that mean? We are not deploying new cash unless I get the signal I'm looking for on gold. Thanks so much for watching. Michael Loftus, Wealth and Wisdom TV.